All right, let's start this session of Niti, our fourth session of Niti. Thank you so much for joining us for this conversation today. I'm just sharing a small thought with which we started Niti, something that Benjamin Franklin had said at one point of time that an investment in knowledge pays the best interest. And with that belief, we introduced Niti, our investor education series at Simplicity. It's been designed to go beyond the portfolio management. It's designed with an effort that we want to build a community of informed and confident investors. We hold this event every Saturday, every first Saturday of every month. And these sessions are here to simplify market complexities, the insights that we bring in. We would encourage more meaningful conversations and how we make more confident decisions. Uh, with this entire event or this conversation for 45 minutes to an hour, what we look at or what we aim at is that every individual that we engage with, it's not just for participating in market, but also to understand what and how their money is growing with a lot of confidence and clarity. All of this with a long-term perspective. And with this, we this time thought that we will do it a little differently. We will invite questions from our viewers, our audience. We have already received quite a number of questions that we will discuss with Rashmi, who is our CEO of Simplicity Investing, a CFA and a CA and a CPA, has been behind this entire vision of simplicity, how to make money simple for every individual. We will discuss this in a minute. While you are on the call and you have any questions, do type it in the chat box as well. We'll pick it up one after the other. And of course, we'll open it for question answer towards the end of the session as well. Thank you so much for joining us today. Shonit and Rashmi, over to you guys.
Thank you, Abba. Appreciate it. Yeah. Yeah, doing this session from Hyderabad. From my hotel room. You must be wondering what's there in the background. Yeah. Okay. Shonit, let's start. So this is going to be a general session where you guys can ask me questions. And Shonit works with our equity team. He heads research. And so every day he has to ask a lot of questions. He has a lot of interactions and with the clients, with the market participants and all that. So Shonit, go ahead and ask me questions. Yeah. Mhm.
Yeah, thank you all for joining in and welcome to the Niti episode 4. So I'll jump to the straight one question I think that has been most repeated from all our clients right now is related to the crude oil. So when crude oil is trading now at $113 per barrel and due to this geopolitical escalation. Now the question from everyone is how, because oil is the natural economic input and everything economical that comes out of it is in everything is economical output. So from your standpoint, is this a fundamental shift of the oil that oil is now going to trade at these levels, or is this just a temporary thing, and how this is going to impact the markets?
Yeah, very good questions. So let me answer this question a little bit differently and go more beyond oil a little bit. What is the background behind this? So America was leading the global economy and there was no one to compete with them till the year 2000. Till the year 2000, see, in the early 1970s and 80s, there was a Cold War. There was a competition between Soviet Union and America for the superpowers. And then Soviet Union collapsed. And so the global leader became US and there was no one. China was very small that time. And China's economy in 1980s was even, GDP was even less than India. So China, till the year 2000, was nowhere in the picture. So, and the US technology companies started doing very good. They took over the world, correct? Microsoft, Google, Apple, and worldwide they were controlling the world economy. Then, after 2010, a structural shift happened. Uh, Between 2000 and 2020, China accumulated huge surplus from exports, manufacturing exports, and they deployed in strategic investments. And now it has come now close to, yeah, it has come close to um, competing with US, and US has got rattled by that. So US got rattled by China's competition. So it's like just let's say you are running a marathon. In marathon, you are way ahead and you don't see anyone behind you for another half a kilometer. You're not worried, and you're running and enjoying, correct? Because you know there's no one to compete. And then suddenly you see someone running neck and neck to you, your behavior will change. And that is what happened with America. So America then focused on how they can harm China's economy. And that's where the whole oil game has come up. Now, if you, I don't know how many of you have read this, uh, China for, had foreseen this. China prepared a game plan. China doesn't talk much. So it worked out where they have monopoly, what is the strategic way they can control the world economy, like earth, semiconductors, and all that. And they were short of, their strength was manufacturing, their strength was in certain key technologies, and their weakness was oil, resources. So what China did in last 1 year, they saw this coming. They today the real reserves means processed oil. 50% of processed oil reserves are with China. So they created massive capacity for next 6 months. They can sustain. Uh, Now, like Pakistan doesn't have oil of more than 2 days. India has about 4 to 5 weeks oil, correct, in reserves. China has 6 months of that requirement. So China saw this coming. It's not that we didn't see that coming, but China strategically saw this coming. And what they knew that if somebody has to harm the economy, it has to be supply chain in oil, commodities, and all that. So the whole globalization shift has taken place, and that's what's happened. That's what happened, and fundamentally, this is going to, in so short term, all commodities market, including oil, and this they are going to be elevated because supply chains have been disrupted. Now, long term, what might happen? This made this there will be a demand destruction for oil. Like, for example, the government of India has taken an initiative that we may not require fossil fuel. We'll force everyone to go electric. We'll force everyone to go on other fuels in energy, correct? So then everyone is focusing more on solar. So the demand for now oil will only get restricted to petrochemicals, material like plastics and other manufacturing. Do you know that 50% of world's oil is required by for this plastics and other products, manufacturing products. So even if we oil is not required for automobiles. We think oil is only required for automobiles. No, oil is required for a lot of other products where still the replacement has not been there. So there will be a oil demand in the near future. For foreseeable future, but slowly, there is going to be a demand destruction. Now that may happen very slowly. On the near term, every economy is going to um, buy more oil. Like when there is shortages, we all try to stock up. Like gas cylinders. Everyone is normally we never care if we had more than one cylinder at home. Now shortages has come. Everybody is stocking 3, 4 cylinders at home. So the short-term demand suddenly spikes. Same thing has happened with oil. With all the economies in the world, they're doing that. After medium term or long term, the demand may not will be reduced because we have overstock, correct? That might happen. But in the near term, oil prices will remain high and it's going to create supply chain and it has got a wider implications, manufacturing. Every country is now going to try to do that. Now, America, there is no shortage of oil. So I had been to US, just I came back from US last week. If you travel to US during this time, except for petrol price, which was $2.50, it has gone to $3.50 a gallon. So 33% jump in petrol. Other than that, the life is absolutely normal there. You don't even know that there is only unless you watch television, you come to know there is a war going on between this and that. Uh, The life, America is completely secure. Now they are doing all this to disrupt China's economy. Trust me, it's nothing to do with they. So that's why they first focused on Venezuela, then they focused on Iran, wherever China was getting oil from that, and that's where the game plan is. So this we will continue seeing this in the short term. But the lessons from this, every economy is going to be trying to big economies like India, Russia, South Africa. They will try to be self-reliant. So we are going to less and less dependency on imports. That's going to happen. Mm. Yeah. Now,
So,
yeah, go ahead.
yeah, adding on to that, you said that temporarily the prices are going to be high for oil. Now, because this also impacts on businesses, the businesses' margins get very well impacted to this. How do you think this will impact the stock market, especially in India, where the situation is? Because everyone believes till election, the oil inflation prices are not being passed on to the consumers yet. But after election, do you think these prices are going to be passed on? Because currently, it's not been there, and other countries around us, they're already feeling the heat of this inflation. So, what do you think has happened going to be with India and stock market?
So the Indian stock market has underperformed the world stock market for last 2 years. India is one of the worst performing in the big economies among the economy more than $1 trillion. Among those top 10 economies, India is the worst performing stock market. Hmm. South Korea has given 100% return. Taiwan has given 100% return. Japan has given 80% return, 70% return. And even US has given 25% return. India has not. India has given only 3 or 4% return in dollar terms. India is the worst. Now, has it because of oil? No. The Indian stock market has not performed because it's looked globally that India is a traditional economy, a consumption economy. India is not an AI economy. India is not a technological economy. And just now the whole world is chasing AI. So whole world is chasing anything related to with data, cloud, chips, semiconductor chips, anything to do with artificial intelligence and computing, hardware and software. Uh, Hardware and software, correct? The world is changing them, and those stocks are doing very well. So that's why even like memory chips, why South Korea gave up 100%? Because South Korea is the largest producer of memory chips, where the data is stored, correct? Um, Taiwan is the largest producer of semiconductor, 90% of the chips security. So that, and America is the largest producer of software, correct? Software. I'm talking about technological, so AI software. So those stock markets have done well. And India is looked as a consumption economy. So, and just now the focus is not on consumption economy, and that's why Indian stock market has not done well. There's nothing to do with oil market, nothing to do with the Iran war, that every economy in the world went down and came up, correct? So that oil price factor has been negated. The war factor is not there. Now the reshuffling is happening. And once this thing happens, what we'll see is Indian stock market. So, like I'll give you, if you take a look at the Indian stock market, FMCG stocks like Nestle, Hindustan Lever, Asian Paints, they have not performed for last 5 years. Why they have not performed for last? They are very good blue chip companies. So India is looked at like FMCG stock worldwide, consumption economy. India is not looked like the technological economy, hardcore manufacturing, all that. And that's where now that shift is going to, when this consumption economy comes back into limelight, Indian stock market will do well. Hmm. And now I think they are oversold. India has been oversold. So it will bounce back. 2 years back, China was oversold and India was overbought. And the delta between China and India, so China had given minus 40% return, India had given plus 20% return. So there was 60% delta. And now it's the reverse. The reverse flip has happened. India is giving minus 20 compared to other economies. There's a huge delta. That flip will again happen. The day it happens, the market will rally. But now it can happen in next 3 months, 6 months. But India is today a value economy. Yeah.
Okay, so coming up to the same question, like build upon, we cannot talk about oil without talking about dollar. So in your previous seminars, you have mentioned that Modi wants dollar to be 100 and Trump wants dollar to go down. So now that Modi scenario is playing out, what is your current scenario based on this?
So why India keeps depreciating rupee, correct? And why, in spite of India having $700 billion of reserves and this, because India still imports a lot of things. So if you look at this, India is oil, defense, education, tourism, uh, you know, in every field, huge dollars are going, correct? In even aviation, airline, we don't have any planes. We have to buy planes, correct? You take any heavy items, technologically, India is totally dependent on. So the dollar, and where India is strongest, India is a very strong in labor. So India is the largest labor force in the world. So if dollar appreciates and rupee depreciates, Indian labor, India earns more. And that is the strategy they're following. And that's what's happening for last so many years. And this will continue in near foreseeable future uh, till India becomes very strong. And no, the other thing also, there is a practically zero FDI in India in last 2 years. Um, Zero FDI means investments in capital, building new factories or new FDI is zero. So, of course, there was a gross FDI. New companies are coming, but companies like LG sold its stocks and took the money out. So the net FDI is zero, practically zero. The largest, India need to be one of the largest FDI countries, foreign direct investment. FDI means foreign direct investments. It should be 150, $200 billion. So then the rupee will stabilize or rupee will appreciate. Then the export surplus we have to have. We don't have export surplus. And China has export surplus. They they have a surplus of $1 trillion every year. $1 trillion, sometimes $1 trillion in a quarter. They have foreign currency reserve $33.5 trillion. India is only $700 billion. So it's a massive, that shift is going to, till that time, rupee will keep depreciating. Now, once the FDI and foreign direct investment and foreign portfolio investments, which are both negative today, they become positive, more money comes in, rupee will stabilize. And rupee might again come back. But I don't see rupee going beyond 100. Rupee will be in the range of between 90 and 100 for next 10 years, foreseeable future. Hmm. I don't see rupee going beyond 100, at least uh, for next 4 5 years.
Okay, connecting to that, when uh, talking about IT, everybody headlines are screaming that IT results are muted, their margins are getting compromised. Even this depreciation is not getting any impacted in their margins. So you have taken a bold a contrarian call on IT sector. So, when everybody are talking about AI will disrupt this IT services field, we have taken a call that IT will do better. So just can you tell the viewers what is your
Okay,
exact
so
call?
okay, so there was a pain in IT. There is a pain, and I'm not disputing that. There is a pain in every industry in the world today because the costs have gone up and there is a layoff happening, correct? If you look at the American headlines, Microsoft, all companies are laying off people worldwide. There is no question whether IT and non-IT, because the cost has gone up, they have to reduce the cost. So their layoffs are happening in every country in the world, every big company in the world, correct? Now, IT, the this 1 year back, IT was overpriced. Now, today, IT has been heavily oversold. per se, IT is not going to go. You will require. So today, Infosys, if it suppose was providing 10 people to service the client, in future it will require only 3 people. Now the laying off of 7 people has to happen. That has happened. That is happening. But the stock has already factored that into it. The stock prices have already factored that into it. Other thing, you will require services. You will require humans. In spite of all the AI and everything, that you will require humans to read the data, analyze the data, to guide the management to take decisions. So where that's the India's strong point, correct? So, but the quality of people, IT jobs will be higher paying, and these companies will reinvent themselves and they will survive. They'll do well. They will do well. So from that call perspective, I'll give another example. A few years back in 2018-19, everybody was there were FDI raids in pharma companies in India. All pharma companies in India were blacklisted in US because of unhygienic conditions and processing and all that kind of stuff. They were, so that time the pharma sector had given minus 15-20% return, and everyone said that pharma exports are going to stop. All kind of stuff was there. See what happened after that. The pharma bounced back more than 150% for a period of next 3-4 years. Same thing is going to happen to IT. IT as a sector is not going to vanish. Now, what is going to happen? The restructuring of the job profiles, so, that is going to happen, and that's already happened. It's happening, and that is factored in the price. And remember, in stock market, people always go through two extremes. Two extremes. Like Shonit, you asked me about a stock called Nalco, National Aluminium, yesterday, correct? In the year 2000, National Aluminium was a 2 rupee stock, 3 rupee stock. Today is 350. 350. So when pessimism comes, it was gone to Sona. You take Bharat, like Bale. Bale during COVID times was a 22 rupees stock. Today is 350. So market always goes through extremes. The pendulum always, just now the pendulum is extreme on IT side and extreme on the AI side, other side, semiconductors. Now, it will always flip again. Both will flip and the balance will be there. So from that perspective, I'm not chasing AI stocks. I'm investing in IT.
Okay, very well. Users have one question. Mutual funds are covering these broader sector, but if somebody wants to get exposure to this new emerging sectors like AI, data center, semiconductor, EV,
Mhm.
how will they do it?
Very good question. So okay, mm, to get exposure, and everyone should have exposure to these new sectors. The only way to get them is you going investing in foreign stocks or foreign mutual funds. And so now, if you are investing in a small player or small investor, then he has to go mutual funds which are available in India, which are investing in US, Nasdaq. There is a Taiwan, Nippon Taiwan Semiconductor Fund is there. There are all kinds of funds available in the market. You can go through that mutual fund. Now, currently, those funds are not accepting new money because the limits have been breached. So that's the other problem we are facing. The RBI had given a total limit of $7 billion that has been breached. So they are not accepting fresh money there. Now, the other way is you go through Gift City, open an account in Gift City, and you can invest through that. There, the minimum investment required is $5,000, and then you can invest through that, and that's a long term. But uh, everybody should have those kind of investments. And if you have a very large portfolio, then you can have your own stock market account. Uh, Through Gift City or through whatever. Now, there are pluses and minuses of each way. For example, if you open a direct account, Indians can open a stock market account in US directly, but the disadvantage of that is there's a estate duty tax. If something happens to that person, uh, anything above $60,000 in that account, 40% Uncle Sam takes away one way. So there is no income tax, but there's an estate duty tax. So it's very risky to do that. So in that case, you go through Gift City. Now, Gift City allows you mutual funds foreign mutual funds. You have a lot of funds there. That is the way that area is opening up now. But everyone should have those kind of investments. Yes.
Okay, very well. So any of you guys present here, so you can get in touch with your CRMs. They will guide you how we can invest through these sectors.
You're offering this
And
kind of services, and they're getting evolved still. Uh,
okay, coming up to the next question, we have one question where if somebody has ESOPs and it has been held by NRI, okay, they have ESOPs in India, and after a lock-in of 4 years, how will these be taxed?
No, okay, ESOPs will be taxed. And so there are two scenarios you're telling me. That person has come back to India, correct?
No,
And the
person is
ESOP,
an outside. Person is outside,
uh,
and they have after the lock-in, if they want to sell their ESOPs, so how will this
abroad,
tax
it won't be
factor in?
taxed in India. If you're living abroad, there's no question of tax in India. It's only the country where you're living, there'll
He
be a
earned
tax.
ESOPs in the person might earned ESOPs in India, Indian company,
Oh,
and
Indian
now
company.
yeah, now he's
Yeah.
an NRI citizen.
Okay, so you're saying a person has earned ESOPs in India and is living abroad, correct? So there'll be a taxation on India, and after that, that tax will be set. He'll have to pay tax abroad, but it will be set off against his. So let's say living in America, and I had a ESOPs of Infosys from my past job in India. So when I get that ESOPs in America and I encash that, whatever taxes India I have to pay, they'll be deducted that, and I'll have to add to my US income. From there, I'll get a credit for the taxes paid in India, whatever taxes I paid in India. They won't be taxed again in America if the tax rate is lower. The tax rate is higher, I have to pay a little difference. That's the way it will work. It will be every country specific. And there'll be a double taxation agreement between various countries. Yeah. So share the details with me. I'll give you a very specific answer how this will work out. So
Okay,
just now I've given a very general answer, but
right.
I can give you a very specific answer if you share the details with us. Yeah.
Perfect.
Now, if
So
there is another case where you're working in America, you're a ESOP in your US company, and you came back to India. You came back to India, now you're residing in India, and just now you're encashing US ESOP. So when you do that, you pay taxes in US, whatever difference is there, you don't pay tax in India. If the tax in India, you'll get a credit for taxes paid in US. But if Indian tax rate is higher than US, you pay the difference. So that's the case.
okay. And if somebody wants to avoid double taxation, if someone is living in UK per se, so how they should approach this?
No, no, no. Say that, repeat that question.
So I have a question. If somebody wants to avoid double taxation and the person
No,
is
no,
staying in
no,
UK,
no. Okay, there is no double taxation of any income anywhere in the world. Let me put it this way. Now, if you have paid tax in any country anywhere in the world, that tax credit you will get here. Hmm? The pain point is declaring that and filing those returns. Hmm? There is no income can be double taxed in India or abroad. So you'll get off set off of the tax. Now, if you have not paid tax abroad, and then you have to pay tax in India. But there'll be one taxation.
understood. And to wrap up, I want your view on your top 3 sectors right now you're looking to, and what is your conviction behind each of them?
So again, I'm saying my top three sectors are I invest in technology in India. I invest in infrastructure sector, and the third sector would be energy sector. These three sectors I'll invest. Um, uh, Now I'll also invest in global markets, depending on my risk profiling. If I'm a small client, a retail client, I won't invest abroad for them because they need the domestic money. But if I am anybody who's having a net worth of more than 2 crores or 5 crores should have exposure of international market. They should have exposure.
All right.
Irrespective
So,
of Nasdaq is expensive or this, you have to keep building a portfolio there. So the advantage of investing in international market is you get now, I'll just give an example. Currently, whoever is invested in US market 3 years back or 5 years back, what advantages they got? They got advantage of rupee depreciation. Rupee 5 years back was 50. 3 years back it was 60. Now that has become 95. So that appreciation got protected. Secondly, the US stock market will outperform in stock market. So you got that also. So you get double returns, correct? So there are two advantages. You hedge against the Indian economy, hedge against Indian rupee, plus you are investing in the more best sophisticated market of the world. So you need to invest that. But I wouldn't recommend this kind of investment to middle class family or this, because they, if there's some emergencies there, they need money, this, that. mm, It's more complicated there for them, correct? But if anyone who's having more than 2 crores, 5 crores net worth, they should invest in that. Yeah.
All right. So these were the set of questions that I've received so far from our investors. And if anybody wants to ask any more questions, you guys free to unmute yourself and have a conversation with Mr. Shah directly. Thank you so much for joining in.
Yeah. Thank you very much. Now, I'll just end up for one more thing I'll say. Investing is a game of patience. Um, if you have patience, you'll make money in this market. Yeah. Hmm. Thank you very much. Bye. Bye.
If anybody wants to ask question, please feel free to unmute yourself, ask any
Oh, yeah.
question.
Still the session is on? Yeah.
Yeah,
Okay.
yeah. If anybody wants to ask questions, so we can take up questions directly.
Yeah, any advice on gold and mutual funds? Not
Gold. Okay. So gold, uh, in the near term, gold may not go up. In long term, so gold is going to be the whatever rally had to happen in last 2 years. Uh, Gold should be 5% of your portfolio. Uh, you do a small SIP and build a good. If don't invest gold for making quick money, that those days are gone now.
same for silver.
Same for silver, yeah. Mhm.
Okay, thank you.
Uh, Gold and silver. Other thing, if you have noticed, every country is bringing gold back to its own country. So India had a lot of gold which was stocked in London and New York, but they are bringing that gold back to India. Uh, Now, if countries like India, China come to sell gold in the market, gold prices will go down. The biggest buyers of the gold currently last 2 years was the government of China, government of India, and in the near future they are not going to buy gold. So you have to watch what the governments are doing.
I mean, one question, not sure whether it is relevant, but
Mm.
whether the dollar value versus gold storage, is it linked, or we should not link like that?
Uh, no, it is linked. Gold is still linked. So, okay, so why gold and dollar? So let me put it this way. Inflation, correct? If the inflation rate in India, let me put it this way, inflation rate in India is 7% and inflation rate in US is 2%. Dollar has to appreciate. Money will flow because if somebody has to give a loan to a company or any industry in India, they if the inflation is 7%, in currency they'll take a loan of 10%, correct? They have to hedge. Now, if the same loan is available at 3% in dollars in America. So the difference between, you have to watch the inflation rates. The difference between inflation in India and US, that is the currency exchange that will happen. And gold will happen between inflation in US and its economy, GDP, correct? If US economy is going into recession, gold also might come down. Hmm? Now, if there is a bubble in US, huh, that if the bubble is there in the US stock market, then gold will go up. I don't think there's a bubble in the US stock market today. Of course, it is doing very well, but there's no bubble. Hmm. But when everything blows off, yeah, gold is linked to it. Gold is considered a safe uh, commodity as a hedge. Dollar is considered the safest currency in the world. Is considered the safest currency in the world. Yeah,
Thank you, sir. Thank you very much.
thank you.
There's a question in the chat box. How important is investor behavior compared to returns when investing for 20, 30 years? What is more important, being disciplined or investing in right sectors?
Being disciplined is the most important thing. So I'll give you, I've been in the stock market for so many years. So uh, whenever I've lost discipline, I've lost money. I've lost money. So, so many times I say I'm not going to change the market. Now I'll give you a classic example. I had invested. Discipline is the most important thing in the stock market. Everything, every sector, every industry comes up, but they come in a different phase. Different phase. Like gave you an example of bail. Bail was 20 rupees, today is 350. Nalco was 2 rupees, today is 350, correct? So that kind of sector rotations do happen, correct? So most important is you have to be disciplined. I'll give you a classic case. There is a stock called Intel we use in the computer, correct? I had invested in that stock 4 years back at $40. From there, it went down to $20, and everybody was talking bad about that stock. But I held on to it. I held on into it, and I bought a little bit more at $20. I averaged it down. In last 1 year, the stock has gone from $20 to $100, 500% return. Now you take 500% return. Now imagine I had to take that pain for last 4 years. If I hadn't taken that pain, I had lost the patience. I would have lost that, correct? So if you keep on changing the lanes while driving on the highway, you get stressed and you may end up late also, correct? You stick to the lane, stick to it, you will eventually reach. So that's what investing is, a patience game. Investing, only thing you have to be careful. You don't invest in junk, correct? Don't investing if you're investing in unknown companies or high risk, then nothing will work. Uh, but if you're investing in blue chip, you're investing in sectors and in mutual funds, you stick to that, you will eventually get 15-20% return, compounded from the beginning. It's of discipline. I've seen that in last my 40, 50 years of my career. Yeah. I'll give you a classic case. I was thinking about this. The first stock in my life in 1978, I bought my first stock in my life was ITC, Indian Tobacco Company. That time it was called as ITC, and I bought it for 50 paisa. At 50 paisa, I sold it at 75, 80 or something. Now, had I kept that share till today, see what return I would have got. I had bought ICICI Bank at 25 rupees. I had bought HDFC Bank at 30 rupees in 92, 93. If I had held those stocks, see what returns I would have got. But we keep on churning the portfolio, and in churning, you lose everything. Okay, what's the next question?
Yeah, we have one question from Mr. Kishore. What do you think about investing in cryptos?
Crypto. If you want to invest in crypto, buy a crypto fund which is available on the international market, um, or invest in a fund. Don't try to play the crypto yourself. I have not invested in crypto. I had bought a stock called Coin, uh, but there also I panicked and I incurred a loss and I sold. It's a very high volatile stock. Had I stayed invested, I would have made money. But crypto, if you want to play, invest a little bit, 2 to 3% of your portfolio in a mutual fund, which is not available in India, but which is available in America. Yeah.
Okay, we have one more question from Mr.
Mhm.
Girish Mutagi. He says, what's the outlook on US technology? Can he consider investing in Microsoft, Google, Netflix, etc.?
Yeah, those stocks, okay, don't, they are highly valued now. They'll correct. Those stocks are good stocks. they should be a part of your core portfolio for long term. Because you see, today the world runs on that, correct? Now, today, what is the treasure? America is what? Microsoft, Google, Apple, Netflix. Any country which tries to tax those companies, America comes heavily on that. America had heavily threatened Modi also that if you would tax on those companies, Indian consumer, I'm going to fail. So they are very protective of those companies, and those companies dominate the world. They dominate the world, and they are going to continue to dominate. Now they will be. They have to be part of your portfolio. Yes, they have. You don't have to buy them to get immediate short-term returns. You have to stay invested in them for long term.
Great, thank
And
you.
follow a process through a mutual fund or this thing. Yeah. Mhm.
Yeah, one can consider SIP in those stocks.
No, those stocks, see, today they are part of our life, correct? Microsoft today, even I'm talking on Teams. What again, Microsoft, correct? Everything is technology, technology. Those are the core technology companies of the world. I'll give you last week. This which is a company called Nvidia. Market cap went to $5 trillion. $5 trillion is more than the total market cap for Indian stock market. And Nvidia was started in the year 1990 with $10,000 capital. India is a country is of 20,000 years old, 5,000 years history we have, and it's still valued at $4.5 trillion. This company, which was not existent in 1990, started in a garage or wherever it is by a $10,000 capital. In the year 2000, the valuation of that company was not even $10 million. Today, it is $5 trillion, more than the whole value of entire India. Can you believe that? Technology. So those kind of stocks now if you buy one stock, it's very risky. I would say buy a basket through a mutual fund. Now, if there is uh, those kind of mutual funds are available in India also, and if limit is over, you can buy ETF, electronic credit fund on National Stock Exchange. You can buy that, but they should be part of your portfolio. They should be, yes. You don't look at them for short-term return. Don't try to chase the market. It should be a part, correct? Yeah.
All right, we have room for more questions. So anybody wants to pitch in?
You can ask me questions on taxation. You can ask me questions on anything, correct? So number one is the quality of your portfolio. Number two is the discipline. And number three is the patience. If these three things you have, eventually you will make money. Coin stock, what is the long-term outlook? Yeah, coin is the number. Coin represents crypto, correct? All mutual funds. So long-term outlook is good. Uh, it's good. But you should not try to trade in that stock. It should be core part of your portfolio for long term. I don't have coin in my portfolio. I had it some time back. I panicked and I sold it off. What is your outlook on it? Stocks in India. Okay. Again, a very good question. Should you invest in stocks or mutual funds? Okay. Now, again, I'm saying one has to evaluate what position you are in your life. So I'll give an example. Yesterday, I had a lunch meeting with one of my clients, and he's a very big, he's a CEO of a medium-sized company, extremely busy. And during COVID times, he's opened account in Zerodha and invested and all that. And now this portfolio is lying dormant there. He says, I don't get time. And that portfolio, and it's nothing like the portfolio was 3.5 crores in stocks on Zerodha. He says, I can't manage it. Can you? I said, okay. So if you are doing if your portfolio is about, let's say, total portfolio is of 1 crore financial assets, you should not have more than 10 lakhs in stocks. Now, I'll ask you a question. Why you want to have 10 lakhs in stocks if your portfolio is 1 crore? Why can't you focus on your job? So let's say 10 lakhs you have in stocks, how much you're going to earn? 1 lakh rupees or 2 lakh rupees or 3 lakh rupees. Is that 3 lakh rupees going to make difference to your life? And how much time you're going to spend on it? Instead of that, the time you're going to spend to earn 3 or 4 lakh rupees to earn on stock market, if you spend that time on your job, you will be better off. Invest in mutual fund. You may, instead of 4 lakh rupees, you'll make 3 lakh rupees. That's what the perception is, correct? But you will do better in life. So stock market, if you want to learn how financial market works, then you invest in stock. I have no issues with that. But there is a cost of learning. You lose some money. Now, if you have a very large portfolio, very large, I have a client whose portfolio is 100 crores. He just invested in 20 crores in stock and he doesn't even look at it. 10 stocks, 1 crore each. He doesn't do anything. Last 3 years, zero turnover. That is the kind of investments you can do. But if you're trying to play the stock market, it's not a good idea. Not a good idea at all. You'll so I always tell people, coconut water is like mutual fund, beer is like stock market. It's we drink coconut water only when we fall sick. But coconut water you should drink every day. It's very healthy. But beer, the perception is cool, correct? But it's not healthy at all. But more beer gets sold than coconut water, and it's more pricey. You're ready to pay more price also. Stock market is like that. People are ready to spend more money, waste more time, incur more losses. Overall, the stock market in India is going to go up, if you ask me that question. But if you want to play the stock market, I wouldn't recommend that. Invest through a mutual fund. Boring
Uh,
product.
I think the question was outlook on IT stocks of India. So
Hmm?
I think the question is IT stocks of India.
Oh, IT stocks. Oh, IT stocks, very good value buy. Very good value buy. Very good dividend yield. Mm, very good value buy.
Also, we
Can
have one more question here. If like families are going global and people are, doing
can
their
you speak
global.
louder? Can you speak louder? Sorry.
Hello? Yeah,
Yeah,
can you hear me?
yeah.
Yeah, so the question is that when families are going global and people want to, do inheritance and succession planning with different tax regimes.
Mm.
So, with different currencies across and everything. So, how does simplicity help with, wealth transfer with
Yeah,
AI?
very good, very good. We do that when families are global, when one children is living. So we eventually see how this family is going to work, where the kids are going to eventually settle, or where eventual the money is going to be consumed. Accordingly, we structure the portfolio and the path. Now, while doing this, when you are global, you need to have minimal bank accounts in if you have 10 bank accounts in India, you can never be global. You have to have only one or two bank accounts. We have to have only one bank account in US. If you have too many items, collections, the first thing we do is clean up the portfolio, consolidate everything, and consolidate quality. Consolidate in quality. I'll give you a classic example. I won't. A few days back, I had been to Dubai 2 months back, 2.5 months back. I met an investor. I met an investor, and he's not my client. And he wanted some help because he global help, correct? And some I thought he must be having a portfolio of 10, 15 crores. He had a portfolio of 250 crores and it was only in 15 items. I was so impressed with him. I told him, "You have done a wonderful job." I said, "Yeah, I've done." And I said, "Very clear thinking. That's why you could do this." Now, he says, "So why you need my help?" He says, "I need the help for my kids, my spouse. They don't understand this. If something happens to me, I need the succession planning. I need all this." So I said, "Yeah, it's easy to do." Now, as against this, I met another client who had 20 bank accounts in India, 20, 10 banks account in Dubai, 10 banks account in US. You, succession plan becomes very difficult. So first we have to close. So we go through what stage of that. We try to understand the family, then we try to understand how eventually the money is going to be used, and then we restructure the investment, and then we look at taxation, estate duty. It's a very, you have to look at very globally, yes. and we work out the plan. Now, how many of you know that Japan is a country where, so if today in India doesn't have any inheritance tax, so if somebody dies in India, his wealth goes to, as per the will, neither he or she or the beneficiary doesn't pay the tax. The wealth gets transferred. In America, there is an inheritance tax, so estate duty tax. So when the person dies, mm, mm, if he's a US resident, anything above $11 million, 40% is tax. $11 million are exempt. One house, one car, one 401k and something like that. Roughly it comes to $11 million. Anything beyond $11 million is taxed at 40%. In Japan, it's reverse. Even if you receive, so in America, the guy who receives the money doesn't have to pay tax. The the estate pays the tax, correct? In Japan, the guy who receives the money also has to pay 50% tax. So every country you have to understand. So if somebody is living in India and Japan, the tax planning is very different. Somebody is India and US. So every country wise we have to work that out. And we have to look at what eventually is going to happen, where the kids are going to settle, where family is going to retire, what is the yeah, it's a very interesting way to we do that working. Yeah. And there is no standard answer one for all. It doesn't fit that way. It has to be customized for every family.
Okay. Well, we have one more question. How are you insulating us from Indian currency depreciation against dollar?
Say that again.
How are you insulating the investors to Indian currency depreciation against dollar?
No, very good question. Now, if you are Indian resident and you have more than 4 5 crores portfolio in India, I try to make sure that you have 20 30% in US. That's the only way I can hedge against that. Now, if you have a very large portfolio, so if somebody has let's say the parents are living in India and the kids are in America, and eventually money is going to go to America, then I'll try to give them 50% dollar portfolio. So today it depends, yeah, but everybody who's having a more than 1 crore savings should have 20% dollar portfolio. And the only way to do that is hedging through investing in global market. The second today, again, I was thinking about this today morning. Uh, IT Indian stocks have taken a lot of beating, correct? Now, their 100% earning is from overseas. Not 100, I would say 70, 80%. They're all dollar earners. So now they are value buy, and they also can be a good hedge for next 2 3 years. Because now if dollar depreciated, Infosys revenue in dollar terms, rupee terms, it has gone up, correct? In dollar terms, may not have gone up. But rupee terms, it has gone up, correct? So even those stocks now are good hedge at the current level. So it's a case to case basis. We have to work it out. There is no one standard answer for all. Yeah. eh, Good questions. I appreciate it. I think, and we want your feedback. Do you want this kind of open session where you can ask more questions and we can pick up a topic and we can go deep into it, or you want in a form of a standard presentation? I'm okay with both of them. Do share your feedback. We'll do more sessions like this. Both, or we can do both. One time this and one time that. Yeah.
Mr. Kushal, are you trying to ask a question? I think I heard your noise.
Okay. One more point is it a good idea to monetize flat into a mutual fund in a staggered manner? Monetize flat into so you mean to say you sell your real estate and invest in mutual fund? Okay. Over a longer period of time, investing in financial asset is 100% more profitable than real estate. Oh, the reason is when you invest in real estate, the real estate has a maintenance cost and also a financial cost, correct? If you rent a real estate, the cost is only 4%. If you own a real estate, the cost is 15%, 12 to 15, which you get in mutual fund. So a person, let's say, let me put it this way, a person who has a 10 crore flat and a person who has a 10 crore mutual fund, who is more secure? A guy who's going 10 crore mutual fund and he's staying in a rented flat, he's financially better off. So rent, yeah, yeah. But one house, I would say you should have for safety net. You should not look at as monetization. One basic house you should have because that gives you a peace of mind. You should not look at return on that perspective. But you should not invest in real estate for returns purposes. But one house you consider the cost and just forget about it. Good, very good, good question.
I think we are at the end of the session, Rashmi.
Okay. Thank you, everyone. Abba, you want to give a thank you note? Go ahead.
Yes, I just wanted to say thank you everybody who joined us today. Uh, it was great to have these questions, and we look forward to having more such sessions. And of course, we'll
Truly,
reach out to understand
truly, Bhuvi.
you expect more from us. And thank you so much for joining us.
I think Mr.
Thanks.
Kishore, you were saying something. I think somebody was trying
No,
to say
sorry,
something.
sorry. No, there is a mistake.
Okay. No worries. Thank you.
Thanks a lot. Thanks.
Thank you. Thank you. Appreciate it. Yes. I'm logging out. Jonathan?
Yes, sir. Okay. Thank you everyone for joining in. It was a good session.
Thanks a
Thank
lot.
you. Thank you. Thank you everyone for joining.
Good one.